Good afternoon, traders. This commodity update is for September the 25th, 2010. And I'm going to start by going over the week relative performance in all the commodity sectors. Top four performers: lumber finished first, soybean oil, then soybeans, then orange juice. Sugar finished about seventh. Going down here to the worst performers of the week, coffee finished down almost 4.5%. Live cattle finished down about 3.4%. Natural gas finished down 3%. US dollar finished down, we already highlighted that in our previous videos. And wheat finished down about 2.5%. But as you can see, a lot more commodities are on the rise rather than going down. That should show you something. Prices are going up. Alright, I'm going to start by looking at cocoa futures. December of 2009, we put in a high of 3,510. That was pretty much the top, because ever since then we've been going down and making lower highs each time. We even made a lower high in July. We couldn't break out of this previous high we made back in May. As you can see, we put in a fresh new low in the September. Now, a lot of people may be looking for the bottom in this. What I'd like to see for us to hold is we have to stay above this March low that we put in back here at 2,745. That's the white line that I drew. On the bullish aspect of things, we have an ascending 10 and 21 day moving average, and the 10 has turned up and it looks like the 21's curving right around. Now if we could consolidate in this area and make a fresh new high and not drop below 27.45, which is right here, I think we could get back up to this 28.63 level, which is the 50-day moving average, and then eventually approach the 10 and the 200. For me to get really bullish to see a high back up to cocoa futures, we most definitely have to break out of this downtrend dating all the way back from January this year, and that would then put us above the 200-day moving average, and all the other moving averages would turn up. However, that's not going to happen for some time unless the dollar really drops and commodities start rising fastly. So for right now, I think that the only trade you could get is a consolidation trade, and you're not looking for any extravagant moves right here. You just have to play the breakouts, and it's basically going to be trading in a range unless we could break out of the previous high we put in last week. Taking a look at cotton futures, what a run we've had since the July low of 73.24. We've ran up 30 straight points and we put in a high. That's this yellow line I drew right here. As for right now, you have to be short-term bearish on cotton. I mean, you have a 30-point run in a matter of 2 months, and you just put in a decent top, and you have a little bit of selling pressure coming in on the volume. Look at this increasing volume that you have right here. Now you got to close at 99.93 today. The 50-day moving average would at 85.19. Now that's a little bit under this 87.10 high that we put in April. Our signs of support will be the 10-day moving average, which is at 97.32, which we closed above on Friday. Then we have our 92.78 being our 21-day moving average. These two are going to act as support. So right now, I know a lot of traders on the street that are short cotton. And the reason for this, they felt that the risk-reward ratio was a lot better than being long it, and I agree with them. It looks like we did put in a short-term top. Now their stop is up here at this 103.34 level. So they're risking 5 points, and their ultimate goal is to get back down here to the 87.10 level. However, I'm sure they're going to be trimming positions once we break down here. They saw the top. They got in around 101, so they're pretty good. I'm not making any suggestions what anybody should do here. I'm just pointing out what some of the people that I know are doing. Next on the list is feeder cattle futures. And we put in a high at 117.87 back here in April. Right now, we've came up, we retested the July high that we put in, and that's where you see this yellow trend line right here that I drew, and we bounced off of it. That was bearish. That's when the bears took control. As you can see, look at this volume spike that we had on this day, early September, when the sell-off began. An interesting thing I want you to note, look at the volume declining. Now this is going to tell you a couple things. It's going to tell you that you want the volume to be declining when the stock, or when the commodity is going down, and the reason for this is you see it approaching the 200-day moving average here. Now the 200-day moving average is also right in alignment with the May low at 107.20. The volume is decreasing. That means the sellers are backing off. They're pessimistic. They're not sure what's going to happen when we approach the 200-day moving average. I'm talking about the smart traders here. A smart trade on this would be, if I were going to take this trade, I'd probably look to get long around this 107.20 level. I'd be looking for a bounce. I'd look for us to maybe pull a little bit under the 200, maybe to 106 level, and then form a bounce back up. But for this to be healthy, we don't need to go back down to this 107.20 level. We need a bounce off the 107.95 level, being the 200, because that will then make us a higher low, and then we could presume back up and start breaking out of these moving averages and look to head back up and retest April's high. So this is a decent looking chart right here at the feeder cattle. Keep this on your watch list for sure. Next up is lean hog /HE futures, and this one is definitely another interesting chart, being that we put in a high back here in April at 87.80. Once again, we've been making lower highs each of the months every time we approach this. Draws a clean trend line dating back from the April high. This yellow line right here, which I'm about to draw in green, that's a nice trend line. Now, as you can see what the chart's doing here, we came down, we put in a low at this 74.09 level. As you can see, this is dating back from a weekly time frame. This 74.09 level is the high dating all the way back from April of 2009. So that's a major support that we tested. Back on a daily chart, look at this volume that came in when we approached this level. Look at this volume right here. Heavy volume, more heavy volume, and we have a lot of volume coming up through this level when we retested it. Now, as you can see, there's a little bit of declining volume over the last week in this. It's well below average, but we're still above the 200-day moving average, the 21, the 50, and the 10. The reason why there's a little congestive period is because the bulls and the bears are fighting it out right here. The bulls are wanting to take it above this 79.82 level and get a close above this downtrend. If we could break out next week at this downtrend right here, retest it, let's look for a move back up to April highs. That's definitely in the cards for us. However, if the bears win, they're going to try to sell this thing below the 200-day moving average, and then a lot more bears will come in to sell. If that does happen, this 74.09 level will be tested and broken. If it does get broken, and this main trend line dating back also off a weekly chart gets broken, you just got to start drawing your trend line, your support levels in, and I'll be going over that. So we're going to watch this one closely. But like I said, short term, bullish on lean hog. Looking at coffee futures right here, we have a trend line that's intact dating back from the June low, and we could connect it all the way through. We're also right at this 50-day moving average, which is at 176.90. We put in our top at 198.65. That's this yellow line I drew right here. The bears took control. Does this chart look familiar to you? It looks the same as the cotton chart I pointed out. Right now, for the bulls to take control, we need to get a bounce off this 50-day moving average, which is right where the uptrend is, and then presume back up. For the bears to take control, they're going to sell it below this yellow trend line in the 50-day moving average, and their next level will, of course, be the August low, followed by the 100-day moving average, which is at 162. So my bias is neutral on this stock and on this commodity until we see it break this trend line in the 50-day moving average. Looking at lumber right here, and this one is in a consolidation bullish mode. We put in a high right here at 337. We had a drastic sell-off, but then we had the bulls fighting back. They put in a low right here in late June. And ever since then, you've seen bullish volume coming in. On all the rallies, you have increasing volume. Now, as you can see here, we have a short-term trend line we drew through August low. When we came down and we approached the 50, the 21, and 10-day moving average, look at this huge volume burst that came through. That's good volume. That's bullish volume. We've just been consolidating in here. Now we have a bullish alignment. This yellow line dates back all the way from a weekly time frame that I drew. This other yellow line right here is the high that we put in September, which we're about to break. They're trying to get it over the 200-day moving average. If that does happen, the bulls are back in town. Short term, I am bullish on lumber. Looking at live cattle right here, we put in a high back here in August at 107. We have bearish consolidation taking place in here. As you can see, we're making lower highs. So we have to get above this previous high for me to be anywhere bullish on this. Otherwise, our next level is going to be this 100-day moving average at 93.65. which is right at this downtrend that I just drew dating back from the March high. So this 93.65 level is appealing if the bears take control. As for natural gas, I really don't watch this one a lot, but we had some bad news come in last week with the drawdowns, and we put in a low at 369. However, there was some major buying coming in here in the middle of the month. So if natural gas comes back down and breaks 369, I mean, we're going to start testing this 350, 325 level near term. This thing just can't get up and go. So right now I'm neutral on natural gas. If the bears do take control, look for the 50 and the 100-day moving average to be your next resistance. Looking at frozen concentrated orange juice now, futures, and we put in a high back here this month at 165.70. Now it looks like a short-term top, but it's a bullish top. It's not bearish. I'm still bullish on orange juice. 153 is the key level we need to watch, which is the March high. We're about to test that, and the 10-day moving average is right there with it. I want to see if we can get a bounce off this and try to consolidate for a move higher than 165.70. If we break below 153, the bears will look to try to drop it back down to the 200, and that could possibly be support. So let's see what happens this next week with OJ. Sugar futures right here, and we put in a high back here in January at 30.40, which is this white line. We put in another high previously earlier in the month at 24.88, which is right here, and we closed above the 10-day moving average, which is bullish. It looks like they're trying to break this one above this 24.88 and head for this 26.05 level. Let's see if we can get above this 24.88 this week and consolidate for a move above 26. Nice flagging pattern going on, just to mention, in this sugar. Corn's had an extravagant move from around this 330 level to 523 in 3 months. We put in a high at 523.75. If the bears come in, which I think could happen right here, a lot of people are getting short around this 521 level, and their stops at 523. It's low risk. If the bears take control, look for your 10-day and your 21-day moving average to be your lines in the sand for your target and profit. Looking at oats futures here right now, we put in a high at 368. It looks just like the cotton chart and the other chart on corn I just showed you. Now they're selling off. They closed above the 10-day moving average today. If they could hold it, look for a move back up to 368. If they can't, we're gonna probably approach this August high, which is at 309.50. That's all the time I have today, guys. You guys have enjoyed the rest of your weekend. I'll have another update next week.